On today's Hashi, I'm discussing recent home price insights for May, the nearly $18,000 raise today's buyers need to afford a home, and an increase in senior renters. Today is Tuesday, July 1, 2025. I'm Byron Lazine, and the Hashi starts now. Live from Connecticut, fresh off of the BAM X live role play. School BAM X only available on school.com/BAM X. We just did members only role play talking about how to increase listing inventory, get more appointments through expired and cancellations. Some of the frustrations that are happening in the market right now are only going to increase sellers getting antsy. Hey, did I pick the right quarterback? Let's go replace the quarterback of my listing, the agent. You're going to see an increase of that over the summer. Okay. We're seeing DOM go up, but we're seeing more buyer markets than we ever did. And that's the conversation that we were having. If you want to join us on these live role plays, they're every Tuesday, 9 a.m. Eastern, right before we go to the hot sheet. Go to school.com/BAMX. Let me know in the live chat if you were there and which market you're tuning in from. I love when Jeffrey tunes in from Byron, Georgia. I got to go there one day. Jeffrey, you and I got to do dinner in Byron. I should move there. I wonder if there's like Byron Way in Byron, Georgia. Sounds like a fabulous place. There is a Byron Way in what a great name of the street. I would just want to steal that sign. Nothing better than Byron Way. Jason picked up his VIP BAM Camp ticket. Got to be one of the last ones remaining. VIP tickets, I know, are going to be closed out soon. There's still mid-tier tickets left for that. BAM Camp, Scottsdale, Arizona, September 24th. So you got a VIP experience the night before. You got mid-tier tickets, which include the mastermind in the morning, and then general admission for the afternoon event. September 24th. You're a West Coaster. Don't sleep on that. It's the only in-person BAM event. All right, before we get into this Cotality, can't even say their name. This is formerly CoLogic, Cotality. Their U.S. home price insights, okay, just released. Before we get into that, I was talking about it yesterday. There's just a lot of signals that we could be gearing up towards a boom 2026, okay? Here's one of the headlines. The big news the last 24 hours, I mentioned it yesterday, is what's going on in Congress with this big, beautiful bill. Okay, the banks are saying, hey, this bill, whether you like the implications down the road, and I particularly don't, I don't like what it does to the deficit. Now, the proponents of the bill say, that we're going to outgrow. There's a couple ways to solve our deficit problem. It's stop spending like drunken sailors. Can't get that through Congress's head. Okay, so it's very difficult to get a bill passed. I get this. I'm not being naive to that. It's very difficult to get Congress to pass a bill that doesn't include a lot of spending. They're addicted. There are a bunch of crackheads in DC. The crack being the free money. Okay. The banks, though, are saying, and I said this yesterday, this is a headline this morning from CNBC. Banks are saying Trump's big, beautiful bill could boost the U.S. economy despite deficit concerns. Listen, I think there's long-term implications to continuing to increase the deficit if you're not outgrowing it. So the defenders of the bill say we're going to outgrow it. And here the banks are saying, hey, there could be a U.S. economic boom coming. 2026, this bill gets passed. You see some of these, agreements in the Middle East stick. You see some of these trade deals. China just did one, getting closer to a lot of agreements there. You see some of this stuff stick. There are reasons to believe that, you could have a big boom year in 2026. Now, if you don't outgrow the deficit, you're going to have problems down the road. Okay, I don't like the deficit for getting a lower 10-year, even though the 10-year has been going lower the last couple of weeks. The 30-year fix is near year-to-date low. The year-to-date low is 6.6. We ended the day yesterday at 6.67. I love the trend line. Okay, could we be trending towards 6? We start the year at high 5s, and you have an economic upkick next year. You're going to see a 2026 that has a real uptick in transactions. I'm not talking price. I'm talking transactions. Real estate professionals, you get a 10, 15% uptick in transactions in the market. Will you take it? What does that mean for your business? If you're on the hot sheet, it probably means a 30%. Can you do better than double what the market does? I think you can. Okay, in terms of accumulating market share. U.S. home price insights from Cotality, formerly CoLogic, rebranded recently if you missed it. Okay, spring home buying season. This is this July 2025 update. They publish them on the 1st. This goes back to looking into May. So it's a rear view mirror look from Cotality, former CoreLogic. Home buying season in the spring was defined by slow price growth and or no price growth. We just had Jose Carreras, Southwest Florida agent, talking to Tom Toole and I in the role play over on BAMX. And they're experiencing negative price growth, right? Tampa, negative price growth. Year-over-year price growth dipped to 1.8% in May 2025, down from 5% growth last May. Slowest since the winter of 2012. 2012 was that double bottoming out in the real estate market. Okay, so we're experiencing the slower growth, 1.8%. Logan Motoshami said something about 1.8% growth. If inflation's at 2, that's the target number. But if it's at 2.4, which is where it's at, you're really negative home price growth at 1.8%. Okay, you're not keeping up with inflation there. Okay, here's the national home price growth as of May for from CoreLogic. Cotality now 1.8%, month over month 0.3%. Really moving sideways in a spring timeframe when you would expect maybe a little bit more growth. The forecast moving forward, forecasting out for the month of June, May to June, 0.8%. So nationally, the expectation here from Cotality when we look in 30 days is that June will have grown 0.8%. And the forecast for the year, 4.2%. Interesting. This is one of the more bullish cases. They're updating their forecast here on July 1, just released this morning. We've seen recent updates over the last 30, 60 days, Zillow being one of them, that is a lot lower than this number. So if you're looking at this will be, in school for you to grab this chart. If you're looking forward, Cotality, former CoLogic, that, they look at a lot of data here, saying 4.2% on national home price growth moving forward. Okay. Taking a look at their affordability meter, median home price right now coming in at 400,000. When buyers get worried about a bidding war in the 350s, it's like, dude, buy the house. Okay. Stop listening to your uncle that you're overpaying at 375. You're below national median price. You can't build it for what you're buying it for. What did JP Morgan Chase analyst? We played the clip on the hot sheet. I always refer back to this one, but it's like, he's like, anything under cost to construct, we buy. It's very simple. If you can't build it for what you can buy it for, buy it and buy as many as you can. Just keep buying them. I think in 10 years, you're going to look at home prices and you're going to be like, wow, we're way more like Canada than we used to be. Think about all the money we printed over the last 5, 80% of the dollars, we printed them in the last 5 years. This is why we have inflation. Jerome Powell forced an extra $2.3 trillion down Congress's throat at the beginning of the last presidential administration. He knew they'd take it. giving crack to a crackhead. Like, they'll take the drugs if you're giving it to them for free. That's what Congress does. Both sides of the aisle, they spend like drunken sailors. And we printed all this money, and what's going to happen? Home prices aren't going to go down 30, 40% when there's all this. You know how much money sitting in the sidelines? You're just starting to see it come out to play now that mergers, with the new administration, all of a sudden M&A deals are happening. It's not just real estate M&A deals. Look across tech. There's a lot of deals happening that weren't happening the previous 4 years. This administration has a new feeling about mergers and acquisitions. They have an openness to them about business development. So this money that was printed over the last 4, that was sitting in money market accounts, just like sitting there collecting dust, it's coming back off the sidelines. That's why one of the theories on this big beautiful bill that I mentioned earlier, if it hits, it's going to get passed. Like, why with the deficit growing is the stock markets also coming in at record highs the last couple of weeks? Well, because they know this bill's coming through and there's going to be a ton of liquidity in the market. That means more deals. Okay. Home prices aren't going down 30%, guys. 10 years from now, home prices are going to be astronomical. Home prices are going to be ridiculous in 10 years. Go talk to some Toronto agent where they all they do in Canada is kind of play this game, the money printing game, right? What's happening? What's happening to that real estate? It's gone crazy. Same thing's going to happen here. $89,000 is required to afford medium priced home. So either dual income or solo income. It's $89,000. I guess you could have 3 incomes combined. You don't see that very often. 1.8% U.S. home price growth. 4.2% the forecast moving forward over the next 12 months. Okay. The Northeast and the Midwest are home to some of the hottest markets. Why? Low inventory. Okay. Texas, Hawaii, Florida, DC, they're posting negative home price growth. Okay. Texas, negative 0.5, Hawaii, negative 0.7, Florida, negative 1.3, DC, negative 2.1. So localized to Texas and Florida, high inventory. Hawaii is a tough second home market for a lot of folks. It's going to be a different market. And then DC, you got a turnover on administration. People are moving out. People are moving in. There's, the whole Doge thing, whatever. For example, a typical mortgage payment, Cape Coral, is now 95% higher than it was for a buyer who bought in 2020. Okay. So today's buyers, Cape Coral, lots of inventory there. I think prices continue to move down there. Current monthly payments sit at about $2,100 as compared to $1,100. It was easy to buy an expensive home when home prices in 2020 or mortgage prices were $1,100. Okay, man, why is Florida not hot anymore? I mean, it is both on temperature and on demand. Like there's not an exodus in Florida. There was an overbuilding the last 5 years, and now interest rates sit where they do. Okay, this stuff isn't hard to figure out. Here are the 10 hottest markets right now. Decatur, Illinois. It's like a decanter, like a wine decanter, Haley. Do you think I spelt that right or said that right? Decatur? Let me know in the comments if I completely messed that up. So you've got a market in Illinois, 12.4%. You've got, something on the West Coast there. It's, I think you got Idaho, Lewiston, it looks like. And then the rest of these markets are Northeast and what they call the Midwest. Okay. But it's hugging the Eastern seaboard or the Midwest section of the country, Northeast, Eastern Atlantic, Midwest, where you got the lowest inventory. That's where the 10 hottest housing markets are. Where they build, which is all here, these Sunbelt states, Arizona, Texas, Florida, Georgia, the Carolinas, these aren't the hottest housing markets. You might have the hottest temperatures there, but they're not the hottest housing markets because that's where they build. That's where inventory has moved up considerably. Okay. So top 10 housing markets reflect where you don't have a lot of the inventory. And what do you know? Top 10 coolest markets, it's where they've built up all this inventory. It's Florida, it's Texas. Okay, outside of those two locations, you've got one in Missouri and you've got one in Hawaii. But generally, Southwest Florida, Punta Gorda, Northport, Naples. I've been in Connecticut 3 weeks. I'm starting to miss Naples. I'll tell you that. Port, I love Connecticut. All right. Starting to miss Naples a little bit. Port St. Lucie on the East Coast. Cape Coral down 7.4%. Going to go lower. McAllen, Texas, 6.7%. Not going to go 30%, by the way. 5.5%. The Missouri market. Texas, Victoria, 4.3. So there you go. Texas, Florida, those are the coolest markets. Where is it affordable? Johnstown, Pennsylvania. Altoona, Pennsylvania. This Decatur, Illinois, 160,000. I am butchering that for all my Decatur friends. Lawton, Oklahoma. You can get a house under $150,000. Buy them all. Okay. Least affordable, California across the board. Okay. California, some of your favorite locations today, your prices are going to reflect, what the disparity on, like, how can you just some of these homes here, San Francisco, a 3-bedroom, 1-bath for $1.5 million. How is that possible? Coming to a market near you in a decade. The dollar's not worth what it once was. We printed so much of it. Real estate's going up in price, not down over time. You're going to have some of these like high risk markets right now. Cape Coral, Lakeland, Florida, Northport, St. Pete, West Palm, all in Florida. Where's the risk? It's sitting in Florida. Okay, if New York City goes crazy, there's some there's a guy running for mayor that might make it a little crazy. You're like, I saw Ryan Serhant clip the other day. He's like, I'm getting calls left and right. People might want to leave New York City. Okay. I think this is safe to say this on the hot sheet. If you're interested in real estate, if you're a real estate professional, you're probably not, very interested in socialism. That's not even I don't even think that's a political statement. Like, I don't think too many people are interested in socialism. And New York City, high tax payers, the high earners in New York City, they're not interested in either. Ryan Serhant, Josh Rubin, real estate brokers that do a lot of deals with some of these high taxpayers in New York City, their phone's going off the wall. So the high risk markets could turn into, high demand markets coming soon. Election time. Okay. We'll see what happens. A lot can happen between a primary and an election. We just saw that last year. But the high risk markets right now, it's all Florida. High risk. Okay. High risk on more price trending downward. Builders need to slow down in Cape Coral. Okay. Inventory is stacked up. You got some rebound, some boomerang buyers went down during COVID, realized they don't like August and going back, miss home, whatever the case may be. There's no exodus in Florida. There'll be net positive migration, but there is price pressure for a lot of reasons. One of the reasons is buyers just can't afford what they once could in Florida. Zillow is reporting that buyers right now need a near $18,000 raise just to afford a home. Median income family would need $17,670 raise to afford the mortgage payments on a typical U.S. home. In 4 California markets, median earners would require 6-figure raise. Okay. Fast forward 10 years. We have price pressure now. Fast forward 10 years, more markets that you love, some of these high price markets, they'll look more like California than they do other parts. Last 4 decades, what did home prices do? Skyrocket each decade. You got blips like you do now where you have pressure downward. You're not going to have a 10-year cycle where home prices go down. Currently, median earners can afford the typical home in just 11 major markets, down from 39 major markets just 5 years ago. Okay. To comfortably afford a U.S. home worth around 367,000 rather, a buyer needs to make nearly 100,000 a year, according to Zillow, assuming they have 73,000 saved for a $20,000 down payment. So homes are getting more expensive when you factor in a mortgage. One of the reasons why I like the momentum of the last 2 weeks, I hope Danielle Hale, Realtor.com chief economist, is correct that we end the year at 6%. We start next year in the high fives, 6%, somewhere in there, going into a spring market with money coming off the sidelines, with investors feeling good. Look at the stock market. They're not concerned about what's going on in the Middle East. Look at the stock market. They're not concerned about the big banks. Like the big, beautiful bill. I don't like growing the deficit, but they like it. I'm just telling you, 26, year 250 of America looks like a boom year, not a bust year. There's going to be low confidence as we navigate through these last 6 months. We're going to be trending towards 4 million existing home sales the rest of the year. This isn't a light switch, but this is like looking into spring market. I could see a 10, 15% uptick on transactions because there's more money floating around. And if rates come down, this affordability problem is solved for more. Price pressure the last 6 months, can afford a little bit more. It's a recipe for more transactions. Here's the raises needed, though, in locations to afford the typical home as we sit here today. That changes. You get 1% off the rate. New York, 100,000. LA, 150,000. Chicago, they could actually lose $187. Interesting. So if you got an employee in Chicago, say, listen, no raise. In fact, I'm going to take $187 back. You're good. Dallas, 17,000 raise. Houston, 6,300. DC, 2,600. This data here, if I'm under the 18,000, if I'm like Detroit and it's minus 1,800, I don't know, that might be something I market to buyers. Like, hey, we're in the opposite of what's happening here in the country. Advantage buyer. San Diego, it's 128,000. Tampa, it's still above the national average, even with price pressure moving down, 27,000 in Tampa. Charlotte's 15,000. So just below national average. Boom market over the next 10 years. Love what the future of Charlotte looks like. Pittsburgh, 11,000. So homes are affordable in Pittsburgh. Cleveland, homes are affordable. 11,000 negative. Okay. You can find more of that as well as all of the, I put all the clips or all the slides rather right inside the hot sheet classroom for you each and every single day. So you can collapse June. You can go back to all of June. Everything I ever shared for June from the hot sheet, it's still there. Quarter one's still there. My most popular charts are there inside of school for BAMX members. But now we kick off July. Everything that I went through today, it's there for you to grab. One click from the iPhone app, or just the app in general, saved into your phone, and all my notes right down here at the bottom, exactly how we bake the cake, how we do the show. It's all there for you inside of school.com/BAMX. So if you want access to that list there and you want everything in one place, slides, just jump into school for BAMX members. 65 and plus age group right now. U.S. seniors are renting like never before. This makes Jerome Powell happy. He wants a renter nation. Point to Homes just did an analysis here and say U.S. seniors are renting like never before. 2.4 million renters in a decade. Okay. Age 65 plus grew nearly 30%. So when they're building like crazy right now on rental homes, on multifamily, it's not millennials only. Okay. It's not because Gen Z's coming up and they're moving out. It's this age group here, 65 and plus. Net change in renters by age group, 65 and plus, 2.4 million positive net change. 55, 64, the second largest, almost 500,000. 45 to 54 lost 1.1 million buying homes. 35 to 44 lost 80,000 buying home. 25 to 35 either moved back home or bought a home, 242,000. 18 to 24 also down 1.2, maybe moving back in. Okay. 65 plus age group is buying homes. As birth rate, here's something, as birth rates decline and the country ages, older people are staying in the workforce longer. Today, about 19% of people 65 and older in the U.S. are still working, up from 10% 4 decades ago. Okay. Interesting. The declining birth rate, long-term view at inventory has some major implications. We'll be covering, I don't know, in the late 2030s, the mid 2030s, when I'm doing the hot sheet for 12, 13 straight years, Haley, we'll be talking about birth rate as being a cumulative problem. Renter age groups in the 75 largest U.S. metros. Here's where they added the most renters in 65 plus: Baton Rouge, Jacksonville, Austin, New Orleans. Austin's got good affordability in the rents right now. Dallas, Raleigh, Bridgeport, Stamford, Norwalk, region of Connecticut, Houston, Lakeland, Charlotte. Okay. The southward surge is part of a broader migration trend, with older Americans relocating for more than just sunny weather, golf-friendly communities. Much of the senior renter boom consists of downsizing retirees, so-called baby chasers, grandparents moving closer to their grandchildren. Okay. Proximity to family, shared expenses, job opportunities. Okay. Baby chase. My parents would be classified as that. Relocated to Florida, in Naples, where my primary is. And, they're living on a retired budget. I think my dad gets pretty bored down there. Okay. Doesn't golf. But guess what? My mom likes being close to the grandkids. In fact, family reasons such as being closer to loved ones, number one driver behind retirement moves. Okay. It's all about family. Somebody's going to move, especially in this market. They need a real reason to do it. Family's the number one reason. The 24 to 34-year-olds make up more than 1/4 of renters. So still the biggest segment, despite the largest net increase being 65 plus. 1/4 of renters is 25 to 34 young folks. So that is what you would imagine there. Here's the U.S. single-family home renters by age group. 25% is 25 to 34. 21% is 35 to 44. So 65 plus makes up 11.2% of, and that's single-family renters. Okay. All right, there you go. More on that if you'd like it. Inside of School, just go to the bottom notes. Got the slides in there for you as well. BAMX members get access to all of that, plus our Friday content drops. And just announced earlier today on the BAMX members only role play, just announced, is that starting today, our BAMX members get an $1,800 plus membership included in their BAMX membership. Mosaic, client experience platform, transaction management, retention tools, collaboration features, all included. If you're a BAMX member, you want more information on that, just go down to Mosaic. That's on top of Zudelia, which is a $2,400 membership included in BAMX. BAMX, by the way, it's $970 a year if you do the annual. $97 a month. Cancel anytime. You're getting $2,400 cash offer platform, generate 4 offers, get paid your full commission, and now a client experience platform. If you're a single agent, solo agent, small agent, Mosaic client experience platform, like put it in the bag. Save you a ton of money on tech stack. Creates a huge experience. You get it free with BAMX. So BAMX members get all of that. BAMX members, tomorrow is live office hours with Chris Benjamin. So Chris and Tessa Bella talking about hyper local influence. So take one idea, turn it into a full content waterfall across IG, YouTube, TikTok, and more. Chris Benjamin and Tessa, two of the best doing that. 10-year here, still hovering around where we were yesterday. I guess slightly up this morning. Last 5 days trending down, 4.246. Better number than we've seen as of late. 6.67 was 30-year fixed, ending the day yesterday. CME Group still calling for an 81% chance that there is no cut. If we go to the poly market, this is where people bet on it. Poly market has a stronger no cut, 84% no change. And looking ahead on poly market to September, that's where people are betting their money that we'll have a 25 basis point cut. 59% say that's the case as of today, 30 days away from the next meeting. All right. I'll have a new Real Word pod up later on the channel. Subscribe here at Now BAM YouTube. That's the free and simple way to support everything we're doing. BAM keeps our articles free on nowbam.com. Keep our content free, pump out more content than anybody in the industry. Free and simple way to support us. Subscribe to the channel, share the channel with somebody who could benefit. We'll have a new Real Word pod up later today. Until then, of course, toodaloo.